All right, everybody, this is the gold forecast for July the 20th to July the 24th. So that's week commencing the 20th to week ending the 24th. Okay, so I'm looking at gold. I'm on the futures chart. Sometimes I use the forex charts, doesn't matter. And I think I'm on the, what am I on the daily? No, let's go to weekly. Let's go to the weekly. Okay, so let's start off. So if you've been watching the other videos, don't worry if you haven't. I'll explain. The last, I think 2 weeks ago, we talked about how I was expecting momentum. I was expecting momentum, but so far we haven't got that momentum. Let me explain. So for 2026, I have a bearish bias, but I have a target, a gold target of 3,500. So if I just squeeze up this chart a little bit, I'm just going to add my levels. Now, don't worry, I'll explain. So hopefully you can see it, but this level right here, this dotted line, that's the 3,500 level. How did I sort of come about this? How did I get this level? So that's simply a fib projection. That's all it is. I've taken the high right here, this gold all-time high, taking this low here that it created, and then projected that distance from this distance right here. Projected that down. There's two levels that usually catch my eye, the 100 and the 161. The 161 is where we get the 3,500. So that's where that level came from. Now, the other thing about that level is that that level overlaps with the auction level. Okay, so that's why my 2026 target is the 3,500. One thing to know is that the banks, Goldman Sachs, Merrill Lynch, the big guys, they have the 2026 target at 5,000 to kind of 6,000. So clearly, my targets is completely misaligned with theirs. So bear that in mind. So last week we've just been saying every time price goes up, so I'm going to go to the daily now. That's the main time frame that I use. And you can see my auction levels are drawn on manually. Okay, this is just to make the chart cleaner. Um, oh, by the way, if this is the first video you are actually watching, don't worry. I'm going to say a couple of things. It's not going to make any sense, but I'll explain everything. Now, this video, I think, is video number 11 or 10 in the gold forecast series. So if something doesn't really make sense, you can watch the other videos. There's not a lot of them. However, don't worry. Everything will be explained in this video. So this is the only video you kind of need to focus on. I'm recording this on a Friday. This is because it just gives everyone time to watch the video over the weekend. And I'm talking about, this week, right? So today's Friday, market is just closed. So this candle, this uh, last five candles, that's this week. Okay, but we're trying to focus till next week. The key thing here is that, and this because we've basically done nothing in the last 3 weeks or so, the focus are the same. They haven't changed. So let's kind of summarize that before I kind of move into um, sort of the overall what's happening here with the auction levels. So firstly, just based on last week and previous week, all levels are the same. I am still bearish. The reason I'm still bearish is because price is still below this red line, this moving average. So as long as price stays below that, my bias remains bearish. If price gets above it, above that line, and stays above that line, then my bias just transitions to bullish. Okay, so it starts right now at bearish, then it may go to neutral, then weak bullish, and then bullish. That's assuming price can get above that moving average. What that means is that anytime price goes up between the current price and that moving average, that just tells me it's just a retracement. I may be right, I may be wrong, doesn't matter. The key thing is just based on my bias, every time price moves up and down between the moving average and the current price. So current price I think is around 4,000-ish, right? That's just a retracement. That means I'm looking for an opportunity to sell if I'm not already in the trade. Okay, that's the same principle from I think 2 weeks ago, where I talked about how we had hit this auction level. Uh, so I call this around 4,000, but because technically it's 3,950-ish, but I just said 4,000 just because there's another auction level just above it, which I've deleted. But let's just call this the 4,000, just so that it's just rounded. We were here, and I was like, okay, we got this reversal. I closed the trade at a short, closed it, and I said we're probably going to retrace back to this moving average, which we did. And when we get there, I will take a short, which I did, back down. The targets are still the same. We haven't changed. We got this blue line. This will be the first major one. So 3,000, let's call this 850. Okay, 3,850, 870, 850. All right, that's the next auction level below this sort of 4,000 or 3,950 level. Okay, so that's our next target. But bear in mind, my overall 2026 target is 3,500. So just bear that in mind. And then I also said that above us, so by above us, I mean above the current price, whatever that is, if you are bullish, then the next major level, so major level is 4,000, I think 500 here. Yeah, 4,500 or 550, 500, give or take. Now, between the current price and the major level, we have other auction levels. Okay, when price moves, I'll show them on the chart. For now, there's no need. But all I'm showing you is just the major one. Okay, the major place you want to get to. So what basically that's really it. So next week is the same. I'm bearish. I'm expecting to hit at least the next auction level, but my eye is on 3,500. I'm not bullish at all. So if price somehow reverses and gets above the moving average, then I'm wrong. I'm wrong. I'm already short. I've already got my entry here. Maybe at the end of the video, I'll show you, but that's not what these videos are about. They're just forecast videos. So let's talk about quickly what auction levels are, how what these videos are, etc. So auction levels are just invisible lines on chart. So in the olden days, I'm joking when I say olden days, but you know what I mean. Um, what I used to do is just manually draw on. So just a naked chart like this. I would just take a line and I'll add it to where I have multiple touch points, so multiple price points. And that gives me an idea where we have a concentration of buyers and sellers. That's it. I used to do this manually. And what I decided to do was just create a indicator that does this automatically for me. Now there is a small addition in terms of the recipe, but basically that's what it's doing. It's internal. It's not public. I'm going to show it to you real quick, but it's a bit messy. You can ignore it. It's just, again, I just want to show you real quick. All it does is it draws these gray lines, okay? These are auction levels. Fancy name. Well, the reason I call them auction levels is because that's where you have the concentration of buyers and sellers. Why are these levels important? Why? All right, let me explain that. So as traders, or as a trader, every time you open your chart, there are two fundamental things you're trying to figure out. Okay, so I would say two main things. There may be more, but fundamentally two main things. Most traders do this at the same time, but I do it separately. So first of all, um, I'm just going to assume that you always have a bias. So there's always going to be a bias. You're either going to be bearish or bullish. For me, it's simple. If price is below the moving average, it's bearish. If price is above the moving average, it's bullish. That's it. There's no need to complicate that part. Okay, so that's just a prerequisite. That's not part of the two main things you're trying to solve every day. So the first part, so the first thing you're trying to solve is if I am bullish or if I am bearish, where is the trade going to happen? So where is the trade going to happen? That's the location. Where is this trade going to happen? So that's the first problem you're trying to solve. That is your location problem. The second problem is when. So when is the trade going to happen? This is more a timing issue or a model issue. So this is the sexy part. This is the part people like to talk about, and this is all about breakers, all about inversion, fair value gaps, all that kind of stuff. Okay, these videos, so the gold forecast videos, are designed only to deal with the first part of that problem, which is about location. Where is the trade likely to happen? In order to do that, I use auction levels. This is how I forecast where price is going or coming from, right? Because I use auction levels to enter and exit trades. Why? Through observation, I can tell you auction levels, they behave like PD arrays. So I'm not saying they are PD arrays, I'm saying they just behave like one. So what I see is prices just going from one auction level to the next auction level. So let me show you this example. I talked about this in the previous videos. So when price was here tapping into this auction level, I said I am looking for momentum down, and the reason I said that was because if you assume I'm correct, then we are in the last 25% of the dealing range to get to 3,500. Assuming I'm correct. Of course, I could be wrong, but we didn't have that momentum. And I said, well, price will probably retrace. And if it does, it's just going, where is it going to? This auction level. So it's going from one auction level to the next auction level, right? And when price was here, again, location, what did I say? Because of my bias, that means I'm anticipating that every time price goes up, it is simply a retracement. So I am primed and ready to switch my mindset from location to then execution, right? So execution is your when the trade happens. So I took a short there, and we are now currently back where? To the next auction level. So auction levels are they have no directional bias. It's just a level. That means in order to make sense of price going from one auction level to the next, you need a bias. You need a bias. You don't have to be correct. You just need a bias. Whichever way you design that, I keep it simple. If price is below the moving average, it's bearish. If price then gets above it, it's basically bullish, right? Okay, so there's a little gray area when price initially gets above or below an auction level the first time because you don't know if it's trying to fake you in or fake you out. That just comes down to trade management, some trade logic to just wait, be patient, and then you can then switch your mindset. Okay, so it's very simple. If you're bearish, you wait for price to go up. That's where you take your entries. If you're bullish, you wait for price to go down. That's where you take your entries. So hopefully everything kind of makes sense. You kind of understand what I mean by auction levels. That it's just a line on the chart. Okay, just doesn't really mean much. You need a bias. And like I said, because it behaves like a PD array, price is just going from one auction level to the next. But if you bear that in mind, um, you can anticipate what price will do because there's only three things it will do at the auction level. It's going to reverse when it gets there. So hit it and reverse. And by reverse, I don't mean completely change your bias. I just mean you're going to see some aggressive action, like a V shape or a U shape. It taps into it, moves away. It's going to just continue. So it's just going to, like right here, it goes into the auction level, bumps up a little bit, and then continues. Okay, to the next auction level. Or it's going to plateau. So plateauing means it can consolidate, it can do a churn, it can do a seek and destroy, and then it does something after, right? So here's an example where price goes into the auction level, just kind of does nothing, eventually it, it moves, right? So those are the three things it can, that's the only three things it can do. Of course, it can ignore it. It can just run through it real quickly. It's going to show an example, but I haven't got it drawn on. But yeah, it can just run through it. So it doesn't stop, it doesn't break, it just goes, right? And just looking at the auction levels, we could, from my observation anyway, these levels, once they become active, they're there forever, just from my observation. A GEPI right now, so pound yen, is now reacting. So from an auction level it created 10 years ago. 10 years ago, right? That's how effective these levels are. So hopefully the video, the actual forecast videos are clear. It's just me saying, okay, price here, this is the next auction level below, or this is the next auction level above. Now, based on my bias, this is the next level I am targeting. But hopefully I've given you a little bit of context where ultimately I think price is going. Again, I could be wrong, but I've given you that sort of context. So next week, it's just the same analysis as last week, which is the levels are the same. I'm still bearish until either we must get above that moving average right here. We must on a daily basis. Okay, it's just to be clear, I use the daily as the primary time frame to determine trend and look at my price, etc. Is price being bearish? Is price being bullish? And what are my targets? But it's sort of a boring, I guess, 3 weeks or so. Price just let's go back to the weekly chart. As you can see, all we're doing is just going down, tap into the auction level, go back up, go down, tap into the auction level, go back up, go into this auction level, come back down, tap into the auction level, go back up. That's all we're doing. I only buy or I only exit at auction levels, not in between, not in between. Because I'm already short from this auction level, I am not exiting the trade unless it comes back and takes me out. So for break even. If it doesn't take me out for break even, this trade will still remain short until the next auction level. And then I can make a decision. Do I exit the trade at the next one? Or do I just adjust my stop loss and just wait till the next one, if that makes sense? So that's pretty much it for this video. Apologies, it's a little bit longer because I'm trying to make sure that you get as much as you can from one video rather than watch multiple videos. So hopefully you got some insights. Thank you very much for watching, and I'll see you in the next video.